In this video, we will give an overview of large private banks in India. To begin with, let me name the 4 private banks that we will be looking at to compare. These are HDFC Bank, Axis Bank, ICICI Bank, Kotak Mahindra. Please do not think of this as recommendation. In coming videos, I will analyze each bank in more details. To compare these 4 banks, we will use 5 years CAGR in each. Net interest income, loans and advances, operating income, book value, CASA. The other numbers we must look at to compare these banks are provision coverage ratio, capital adequacy ratio, gross and net non-performing assets, return on equity, return on asset, cost to income. Number 1. What is net interest margin and net interest income? Net interest margin or NIM denotes the difference between the interest income earned and the interest paid by a bank. For example, when the bank pays interest at 7%, and receives interest at 10%, this is 3% net interest margin. Lower interest the bank has to pay, and the higher interest it has to receive, increases net interest margin. Net interest margin cannot be used as a measure of profitability as it does not account for fees and non-interest income that the bank generates through services like brokerage and deposit accounts. ICICI Bank has NIM of 3.42% and net interest income of 27,000 crores. Net interest income grew by 7.28% CAGR in last 5 years. Axis Bank has NIM of 3.07% and net interest income of 21,708 crores. Net interest income grew by 8.18% CAGR in last 5 years. HDFC Bank has net interest margin of 4.3% and net interest income of 51,448 crores. Net interest income grew by 17.08% CAGR in last 5 years. Kotak Mahindra Bank has net interest margin of 3.60% and net interest income of 14,748 crores. Net interest income grew by 23% CAGR in last 5 years. Number 2. What are loan advances? Banks issue loan for several purposes. When an individual wants to buy a car, he goes to the bank for approval of loan. Same applies when an individual needs money to expand his business, needs loan for working capital requirements, or for educational purpose, etc. More the advances, higher will the interest banks receive given the loans do not default. This reflects in non-performing assets which we will look at later. ICICI Bank has total advances of 586,000 in 2019. This has grown by 8.64% CAGR in 5 years. The bank lends to 70% retail clients, which is up from 42.5% in 2015. Bank's retail advances grew by 22.24%. Axis Bank has total advances of 494,000 crores in 2019. This has grown by 11.97% CAGR in 5 years. Bank's retail advances grew by 17% CAGR last 5 years. HDFC Bank has total advances of 819,401 crores in 2019. This has grown by 13.89% CAGR in 3 years. Bank's retail assets stand at 432,000 crores, growth 13.59% in last 3 years. Kotak Mahindra Bank has total advances of 243,462 crores in 2019. This has grown by 29% CAGR in 5 years. Number 3. What is operating income for banks? The primary business of a bank or financial institution is by nature financial. The net operating income of a bank or holding company includes profits and losses derived from financial transactions excluding the purchase or sale of securities and stocks. The resulting figure is referred to as the net operating income of a bank. Because banks both pay and collect interest on various transactions as a normal part of their business operations, interest payments are included in the overall net operating income reported by banks. ICICI Bank earned core operating income of Rs 22,000 crores in 2019. Bank's core operating profit has grown by 4.13% CAGR last 5 years. Axis Bank earned core operating income of Rs 19,005 crores in 2019. Bank's core operating profit has grown by 7.25% CAGR last 5 years. HDFC Bank earned core operating income of Rs 39,749 crores in 2019. Bank's core operating profit has grown by 17.96% CAGR last 5 years. Kotak Mahindra Bank earned core operating income of Rs 8,348 crores in 2019. Bank's core operating profit has grown by 22.73% CAGR last 5 years. As each of these companies operate with different asset base, the best way to compare performance would be last 5 years CAGR in operating profit. Number 4. What is book value? Book value is an important measure to value banks. Book value is when all the assets on the balance sheet get subtracted from liabilities gives banks net worth. Advances on banks' balance sheet are classified as assets and bad lending can result into defaults and therefore reducing banks' net worth. Banks with superior underwriter skills and risk management may trade at 3 to 4 times its book value. ICICI has current book value of 172.47, a growth of 4.13% CAGR last 5 years. Axis Bank has current book value of 259.27, a growth of 6.5% CAGR last 5 years. HDFC Bank has current book value of 547.89, a growth of 17.23% CAGR last 3 years. Kotak Mahindra Bank has current book value of 302.7, a growth of 21% CAGR last 5 years. Number 5. What is CASA and why is it important? A current account, savings account, CASA, is aimed at combining the features of savings and checking accounts to entice customers to keep their money in the bank. It pays very low or no interest on the current account. This helps the bank get cheap cost of funding and improve net interest margins. ICICI Bank has CASA of 323,000 crore rupees in 2019 and total deposits of 652,000 crores. The bank's current CASA percentage is 52.5%. While bank's CASA has grown by 14.5% CAGR last 5 years. Bank's total deposit grew by 12.54%. Axis Bank has CASA of 243,000 crore rupees in 2019 and total deposits of 548,000 crores. The bank's current CASA percentage is 52.5%. While bank's CASA has grown by 11% CAGR last 5 years. Bank's total deposit grew by 11.2% last 5 years. HDFC Bank has CASA of 391,198 crore rupees in 2019 and total deposits of 923,000 crores. The bank's current CASA percentage is 42.38%. Bank's total deposit grew by 12.77% CAGR last 3 years. Kotak Mahindra Bank has a CASA 118,586 crore rupees in 2019, grew by 44% in last 5 years. The bank's current CASA percentage is 52.5%. The bank has total deposits of 225,800 crores, a growth of 24.7% in last 5 years. Number 6. What is non-performing asset? A non-performing asset, NPA, refers to a classification for loans or advances that are in default or are late on scheduled payments of principal or interest. In most cases, debt is classified as non-performing when loan payments have not been made for a period of 90 days. While 90 days of non-payment is the standard, the amount of elapsed time may be shorter or longer depending on the terms and conditions of each loan. For a bank, if non-performing assets are increasing, the interest earned would fall and therefore lower net interest income. Meanwhile, a higher NIM will increase the profitability of the lender. ICICI Bank has net NPA of 1.77% in 2019. Axis Bank has net NPA of 2.06% in 2019. HDFC Bank has net NPA of 0.39% in 2019. Kotak Mahindra Bank has net NPA of 0.75% in 2019. Number 7. What is provision coverage ratio? The provision coverage ratio, PCR, gives an indication of the provision made against bad loans from the profit generated. Higher the PCR, lower is the unexposed part of the bad debts. In 2019 ICICI the bank has PCR of 70.6%. Axis Bank has PCR of 77.6%. HDFC Bank has PCR of 71%. Kotak Mahindra Bank has PCR of 67%. Number 8. What is capital adequacy ratio? The capital adequacy ratio, CAR, is a measurement of a bank's available capital expressed as a percentage of a bank's risk-weighted credit exposures. The capital adequacy ratio is used to protect depositors and promote the stability and efficiency of financial systems around the world. Two types of capital are measured: Tier 1 capital, which can absorb losses without a bank being required to cease trading, and Tier 2 capital, which can absorb losses in the event of a winding up and so provides a lesser degree of protection to depositors. ICICI Bank has total CAR of 16.89%. Axis Bank has total CAR of 15.84%. HDFC Bank has total CAR of 17.1%. Kotak Mahindra Bank has total CAR of 17.5%. Each of these banks adequately capitalized, well above what is required by the regulator. Number 9. What is return on equity for banks? A company's capital structure is made up of equity and debt. Return on equity is used to measure profitability for a company given its equity base. One inherent flaw with the ROE ratio is, companies with disproportionate amounts of debt in their capital structure show smaller bases of equity. In such a case, a relatively smaller amount of net income can still create a high ROE percentage from a more modest base of equity. Banks with ROE of between 10% and 15% are desirable. We will now compare ROE, ROA and cost-to-income ratio together. ICICI Bank has an ROE of 3.66%, ROA of 0.35%, cost-to-income of 48.98%. Axis Bank has an ROE of 8.09%, ROA of 0.63%, cost-to-income of 44.28%. HDFC Bank has an ROE of 14.60%, ROA of 1.9%, cost-to-income of 38.41%. Kotak Mahindra Bank has an ROE of 12.84%, ROA of 1.91%, cost-to-income of 38.52%. Thank you for watching. To learn more about stock market investing, analysis on companies, summaries on books and to get stock tips, follow us on YouTube at MJKF Investment. Don't forget to press the bell icon to get notified when we upload a video. Please do like, subscribe and share.